Thank you guys for jumping in on our YouTube channel. Hopefully, you'll find this video a little bit clarifying and helpful. If you haven't watched our town hall on session liquidity and quarterly theory and kind of our application of those ideas, although the ideas in themselves don't originate with us, I think our application is fairly unique and helpful and can be clarifying. So, we're going to run through a trade example from today and kind of the logic that came into it. So coming into this session, we like you'll see if you've watched the video from the town hall. We're looking at this block of time as the first quarter, this block of time as the second quarter, and this block of time as the third quarter. Okay, so Q3 there, right? So in the same way that we can organize big blocks of time into sections that we can evaluate. We can also block small pieces of time into sections that we can evaluate and look for patterns. And so, what we were looking at coming into the open here, so we have a micro session 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, 4. So why would we be numbering those in that way? Because these four together create Q1 of the New York AM session, and these four together create Q2. Okay, and so we look at Q2, the midpoint of Q2 is of special interest to us in this sequence. And so the midpoint of Q2 is right here around this 93.25, 93.50 spot. Again, 1, 2, 3, 4. That's the first quarter. 1, 2, 3, 4. That's the second quarter. Inside of each one of these quarters, there are smaller quarters. That's what I'm looking at when I'm talking through this area. So when we get to here, this candle trades inside the high and low of the last quarter micro session of this leg. Right? So the midpoint of this candle here becomes very pivotal for us. We're looking at this to create directional perspective off of this level to the upside or the downside, with our targets being here, and then whatever swing highs are present, ultimately terminating a portion of the trade, hopefully into the accumulation midpoint from overnight, and then seeking that liquidity from the session highs of New York. Okay, so that was the trade thesis. The idea was to get positioned here around 61. Okay, they did not make that super easy. Why was I not interested in the downside trade? Because the next really believable liquidity for me was much lower. And watching us trade off of essentially a no tick OR created a higher probability for a move to the upside. So I'll show you the execution on the idea of trading off of this micro accumulation. That's what this is called. Internal micro accumulation midpoint, IMAM, right? So that's what I was looking at there. That's that 6150. And then we'll go over here to the execution chart. Wasn't the tidiest day, but it was all right. Okay, so we have this 6150, and we're trying to look to 6150 for directional bias, but we're also appreciating the fact that we're a no tick OR. So at this point, we're only looking to the long side until we break through that, right? So on the heels of that, I was trying to get positioned here with fairly tight risk for a trade up through just this local swing high first. And then I wanted to see us take this swing high. And then my targets were here and here. I took a few contracts in this area, took a stop first, grabbed another couple batches, scaled a chunk there, took effectively a break-even stop on the balance. And then we did this little move, which was tough. I had no way to buy that other than price risking off the low, which I wasn't super comfortable with at this point in the day. So at this point, I wanted to see us recover that 93 to give a little more confirmation to the upside trade. Remember, the 93 was the midpoint of this stretch right here. I wanted to see us recover that midpoint and then lean on that for the opportunity higher. Okay. So if you're in the chat, you kind of heard some of the talking about that. But we recovered that midpoint here. When we recovered that midpoint here, I kind of didn't take this first opportunity to risk against it. I kind of wanted to see a little more. And so I sat on hands. We made an internal swing high that becomes a local target. We trade down. I risk off this low, take a pretty close stop. This was scaling. I was scaling into this, so this was just a little piece. And then when I saw this little manipulative sweep of that while still holding this, that gave me the confidence to look to start to scale in with a little more size. So we got a couple more fills off, and then we're able to scale out. Scaled a little batch here just to cover the stop and some commissions, and then scaled the rest in accordance with the plan at the internal swing highs, and then this overnight midpoint at 48, and then the last batch off at 73, which was the New York AM Open. The main reason to go over this is just to show a couple things. One, you don't have to get it right the very first time and be in from the very bottom. If you have the right directional bias and the kind of and some structure around what you're looking for entry, as well as confirmation of directional bias. And then two, that scaling into reasonable targets, like every trade doesn't have to be a home run, right? Like this, I think the most on this last leg was like 70 points or something like that. Nothing like to write home about, but that's a good, solid trade on a day that, you know, kind of started off a little bit on the annoying side, and then again sticking to a plan, sticking to a process, sticking to structure. Along the way, there were auxiliary spots that we were looking to lean on to see us recover, to see us hold, and then but that target of 73 was really a great scale. We were also coming, it was 11:15, so we were coming into the last stretch as well of our so we have this quarter right here, these four, and then we have these four that make up the next quarter. That's a terrible way of drawing that. Let's do it this way. So this would be one. Get the pin right. This would be one. Cover these. Okay. These would be two. This batch of four. Okay. This batch would be three. And then we were into the fourth quarter. Okay. So we were scaling out in the last section of the fourth quarter of the AM session. And that's where this trade kind of, the logic of this trade and the time, the duration I wanted to be in this trade, that's when it expired. The anticipation was, and always is, or at least a lot of times, is that lunchtime can bring a real strong potential for a change of trend or a change of direction to run for some other liquidity, which we saw us do through the afternoon session. So just wanted to run through kind of some of what I'm looking at on execution, how I'm taking this information, boiling it down even into smaller chunks and smaller key spots to try to trade them in accordance with that. So hopefully you find this overview helpful.